Hey guys, what's up? Welcome to another episode with me, Shashank Odapa. And in today's episode, I am going to do a quick review of my portfolio and I'm going to look at what went wrong, what I could have done better. And again, my portfolio is a very aggressive portfolio in this market. And I mostly have small cap and mid cap. But again, let me quickly dive into this episode and show you. Again, the reason for doing this episode, as you know, I'm a SEBI registered research analyst. I cannot show you the stocks that I currently own because then that would come under insider trading and unfair practices and unfair benefits, because I can buy the stock, then show it to you and you would buy, and that would influence the price. Hence, what I've done is I have gone through it as much as possible without showing the actual names, but you will get a good understanding of the entire portfolio, and your job is to basically learn from this video, right? Now, let's quickly go and see what's happening with Nifty, because Nifty obviously ain't doing great. If you look at Nifty right now, Nifty is below the 200-day moving average, and it is almost 3% below, 2% below the moving day, 200-day moving average. In fact, it has actually come up a little bit right now, which is not bad. But again, we're still very far away from the 200-day moving average as well. Yeah, I think you can see it right now. Okay, wonderful. Let me zoom in a little bit for you guys. So this is my portfolio. Let me show you. So I have basically taken different company names over here. I have removed the company, but I've put the sector, the industry, the market cap, categorized it with respect to large cap, mid cap, small cap. So let me show you a quick brief of the portfolio right now. So the entire portfolio is worth 2.23 crores, right? As you know, 50% of my net worth is in real estate, 50% of my net worth is in this equity portfolio, right? By the way, I'm 100% equity, and whatever I have is currently in equity. Remaining amount of my money is in real estate, right? So 2.23 is what I've invested, and I've been investing in this portfolio from a very long period of time. Almost 2 years is when I've been investing in this portfolio constantly. That was the last time I had churned it. And if you can see, zoom in right now the current value is 1.76, which is basically 46 lakhs negative. But don't go with the INR number. The actual percentage is what matters, and that is minus 20%. Why? Because my entire portfolio, as you can see here, is micro cap, small cap, and mid cap. I have one large cap, right? So obviously the small cap index has also fallen by almost 20-25%. And with that, my portfolio has also gone down by 20%. But let me go one by one into the portfolio. So the first three companies that you can see here are a swing trading. I'm doing swing trading on these three, right? This is my large cap. So this large cap is not even a long-term portfolio. This is actually a swing trade. So there's a swing trade in three companies that I'm doing. And I think each of these positions are around 5 lakhs. So it's 15 lakhs of swing trading. Out of that, one is at a profit of 1.13, one is -4, -5. So again, market is not doing good. So swing trading will also not do obviously great, right? But the weightage on the portfolio is only 2.7 to 2.6%. So obviously not a very big weightage. 6% of the entire portfolio are these three swing trades. Again, we might do good, might do bad. That's a part of the game. But this is swing trade, as in this is not something that I'm buying and selling tomorrow. This would be there for, let's say, 3 months or 6 months, slightly longer. And you can see I'm playing on three themes. One is the banking theme, one is the metals theme, and one again is another commodity theme, which is basically steel. So three companies that I've taken here is what I wanted to show you. Then I have your long term. Now I'll come to the remaining three mid cap companies, right? Now these are long term, and I've also categorized it as how long they are. So company 4, which is a shipping company, 20,000 crore market cap, mid cap company, is currently a 5-year long is what I'm looking at. Now, what do I mean by 5-year long, right? I will obviously hold this company as long as I want, but 5 years is the time I'm giving it to see the play out that is happening. This is a very interesting shipping company, was in a big debt before. Now, in the last 4 years, they've gone from high debt to zero debt. In fact, now they've made so much cash that they're now giving it back as dividends. So this is a very interesting company that I am currently looking at right now, right? So just recently entered into this, just before the fall, obviously recently entered into this. And you can see that this company, because of the whole oil and shipping and all of that, it's actually gone up. So it's up 4.15%, and the allocation of this weight in the entire PF is almost 9.16% of my entire portfolio, right? Then we have the second mid cap company, which is a pharmaceutical company. This is a 12,000 crore market cap company. So by the way, just wanted to show you guys that if you remove the three swing trades, which will be gone as soon as I get some profit, my highest long-term market cap is 19,999, which I've recently added. Till then, it was this 12,000 crore market cap company that was my highest market cap. And also, as I told you, my portfolio is very concentrated. I only have 13 stocks where I've invested 2.2 crores in, right? Only 13 stocks. I'm a very concentrated investor. I don't believe that I should have 20, 30 stocks. Yes, I will go up to 20, but if I like something, I will go all in that, and then I will leave it for longer term, right? Because most of it is long term. So this is a 20-year pick. Again, this company is a company I've been holding for quite some time. As you can see here, my average cost is 2157 when I bought it. Now it's at 1636. I have constantly kept adding it more and more. I've almost put 28 lakhs in this. This is my almost third highest holding, I think, is this company. In the entire basket is 28 lakhs, which is a very good pharmaceutical company, down 24%, but I'm adding as and when I can get chance, I keep adding it. It's 12% of my portfolio. This is again a debt-free pharmaceutical company that has a good amount of exposure all across the world, not just in India. They are in US as well. They're in multiple different departments, and the management is top quality. That's why I said long 20 years, because this is something I call as a portfolio stock, right? This, I will not care about it. I don't even look at this stock on a day-to-day basis. I don't even have to track it, because I know that once in 3 months I look at the result is fine. I don't even bother about it because the management is good, right? Then we have an energy exchange that I've bought recently. Actually, this I've been buying from the last 180 days. I've kept averaging 10,000 crore market cap company, mid cap right now. It is a long 10-year hold for me over here. I have almost 21,000 quantity. Actually, it's not 21,000 quantity. It is 33,000 quantity, because I've pledged the remaining amount, but it's okay. It's actually 33,000, because if you take the invested amount and divide it by the average cost, you will see it's 36,000 is what I actually have. Correct. Remaining 15,000 is pledged, because I use that margin to do some F&O trades. But totally 36,000 quantity is there in this company, and the average cost I have managed to get is 144. Obviously, it had fallen from a very high number. Now it's at 144, but today it is at 120, 121, and I've averaged a lot. In fact, I've kept buying it constantly. This is the highest weightage in my portfolio. As you can see, it is 25% of my portfolio. Basically, 1/4 of my entire portfolio is just this one company. Now, this, again, I don't know. It's a very high conviction bet I personally have. It might do good, it might do absolutely bad. I have no idea. I have to see whether it works or in my favor or goes against my favor. So if I'm right big. If I'm wrong, okay, because this is already sitting at 20p right now. It has fallen down a lot. Dividends are almost 2%. So recently I got a dividend of, they gave a dividend of 1.5 rupees. So I got almost 45,000 rupees of dividend. Obviously that's nothing compared to the loss that I'm in, which is around 9 lakhs. But this is a company that I'm taking a big bet on. It might work, might not work. If it doesn't work, I'm okay. I'll live to fight another day. Remaining companies are there, right? Next, I go into the small cap territory. By the way, my portfolio is not an ideal portfolio for anyone, because I have the ability to take risk only because 50% of my portfolio is sitting in real estate, and that is doing really well. My real estate investments are around 3 crores right now. So even if this entire portfolio goes to zero, which will never happen, I will still have 3 crores. 50% of my portfolio is there to save me, right? And that is almost debt free, the entire real estate. Coming to company 7, this is a 5-year long hold. Again, it's a pharma distribution company, recently became cash flow positive, 4,500 crore market cap. Again, a nice bet, but this I have just started buying. As you can see, I only have 2 lakhs invested in this. So this I need to take it up to 20 lakhs. So as and when I get money, I keep buying this constantly, right? So I have this rule where at a time, I only buy one company. I don't buy SIP kind of 15 companies. I just buy one company and I finish going up to 20 lakhs and then I stop. Usually 20 lakhs is my first trigger to stop. If it's a really good company and I really believe in it, every time it falls down, I put more. So this is the company that I've just started right now. As you can see, it is 5% down from where I've started buying, and the weight is only 1%. So it doesn't impact my portfolio, but I have to go a long way to go. 18 lakhs I have to put here. So maybe this whole year I will only keep buying this one company. Because I believe in the next year or the next to next year, this should do well. Again, according to my analysis and my thesis, can be absolutely wrong in the entire thesis. Okay. Then comes a IT distribution company. Now, this is again a very interesting company. I added recently, 2,400 market cap. Now, the competition of this company is India's largest IT distribution company. They are sitting at, I think, 20,000, 10 times bigger than this, right? But this company is operating at better margins than the market leader. And there is a very big demand supply mismatch right now with the world of RAM, NVIDIA chips, etc., etc. So this company is getting a short-term boost. So again, this is a 5-year play. I think 3 years max, I might take it out. But if it does really well in 3 years, I will continue holding it. Maybe I'll book the profits. So this, as you can see, I recently bought it. Average cost of buying was 381. Right now it's a 348. 19 lakhs is what I've been deployed into this. As I said, 20 lakhs is my budget to invest per stock, because that will make it 10% on my entire portfolio. So this is again 9.84% on my entire portfolio. So I'll just make it green to show you guys. Then we have a short-term 3-year play. It's a power infrastructure small cap company at 1,900 crores. This is a recent company that is also there. It is, I think, in the power EPC space, which is engineering, procurement, and all of that. Again, quantity is 1,500. Buying price was 2,000. It has now gone to 1,500. So it's actually fallen down 24%, minus 7 lakhs over here. And it is 13% of my portfolio. So it's actually quite big, but I kind of bought more because I believe that the next few quarters will be good. And right now, whenever it dips, I buy more if I believe in that company. I'll go a little faster on these micro caps. Micro caps, you don't need to see so much. One is a pharma manufacturing company at 1,000 crores. One is a glass manufacturing company at 583. One is a seafood processing. I was playing it for India-US trade deal. And this is a random 80 crore bet, 80 crore company, that is random bet. But I put 6 lakhs in that. So if it works out, it should like recover everything, but it's a random bet, right? And here I've invested in this micro cap. So the pharma one I'm very bullish on. So 21 crores, very good management. 25 in this glass manufacturing, again bullish on it because I know the next 2 years should be good ideally. So overall, let me come to it. And this is 8% of the portfolio. The remaining two small bets are 3 and 2%. So it won't matter so much. So totally comes to 2.23 at 1.76, minus 46 and minus 20 lakhs on the total basket, 20% on the total basket size. Now coming to the other facts, right? Let me go to the sheet 2. Sector analysis. As you can see, this is how it has been placed right now. So I have 13 stocks, out of which industrials are 2. Healthcare, I'm actually overweight. If you look at it, I have 3 healthcare companies sitting at almost 51 lakhs. 1/4 of my portfolio is just here. Utilities is that power exchange, which is again 50 lakhs. So technically 4 stocks are literally 50% of my basket, right? Out of 13, 4 are 50% of my basket. This is why it's very important for me to also look at my holdings once in a while. So now I know where to go aggressive and where not to go aggressive. So this is a sector based PNL that I look at, right? Materials is 35 lakhs, IT is 25 lakhs. It's okay. So this is fairly diversified, but I would say the weightages are not fairly diversified. Now I know that I should not put more into healthcare in this one. I should go start putting more into materials and IT, or something that is a contra play. I should start putting it there, right? Coming to market cap breakdown, same thing. Large cap I will not count because it's swing. So mid cap I have, actually large cap is not 6, large cap is only 1, mid cap is 5. Mid cap is 5, 2, micro cap is 4. So this is basically how it looks like. Coming to risk and rebalance, so this is how it looks like from a summary standpoint. Stocks in loss 11 because I've been buying from the last 180 days. Most of our stocks are in loss. Biggest winner is the shipping stock. Biggest loser is a pharma stock. Right. And again, as I told you, top 5 holding concentration of mine is at 69%. So it is a big learning for me that I should not do this. I should start increasing my exposure into other companies and go a little bit into other sectors as well. Right. And if I actually look at what is needed, and these are my mistakes, portfolio mistakes and lessons for me, and maybe you guys have this as well. But if you don't, I think you should strongly do this for your own portfolio. So that you also understand how your portfolio looks like right now, right? For example, I have extreme concentration in one power stock. As I told you, that one exchange I have, which is 25% of my entire portfolio. If it does well, yes, my entire portfolio will go flying. But because it's a concentrated portfolio, the swings are also very high, right? It can go up very fast or it can fall down very fast. Second is that glass company I have, which is a micro cap. I have actually put a lot of money into it and it's down 42%, which is almost 10 lakh loss, right? Which is a big one. So either I should do a tax loss harvesting here or reevaluate in the next quarter result. Is it going the same way or not? Because if a company can fall 42%, then something is wrong. So maybe my thesis was wrong. Maybe my analysis was wrong. Maybe I should, do a tax loss harvesting, take that 10 lakh loss and then invest the remaining capital into something else that can generate my money. Now, one thing very clear, I'll tell you, I am a guy who does not even think twice before booking a loss. I know a lot of retail investors get scared before booking a loss. They might think, how can we book this loss? If I've invested 20 lakhs in this stock and it's down 10 lakhs, means 50% is gone. If I feel that this stock will not double, because the only way I can recover my money is double. If I feel it will not double, I will instantly exit it, take that 10 lakh loss, invest this somewhere else where I feel opportunity is there for it to at least start going up. And wherever I make profit on the other side, I will cancel that profit with this loss, because you can do tax loss harvesting, right? So I don't even think twice, because I don't want to be stuck with a stock that doesn't move for 3-4 years. I will rather give another fast mover a chance. Okay. Now coming to microcap. So I have good microcap exposure, one in an 80 crore company, 500 crore, 1000 crore, 300 crore. So this 4 microcaps have a good, exposure in my company. So then I have to reduce the microcap exposure. No large cap. Now, this is one of the biggest things I should change, which I have realized, because even I was in that notion that large caps don't generate money. I have time. I have 50% in real estate. So I can take very aggressive bets. But I feel I should add at least more higher end mid cap or higher end large cap. I do have one or two things in my head. Maybe add some healthcare large cap, healthcare mid cap, maybe something on those lines, something that is low beta. That means it doesn't fall when the market falls too much. But that is something I really need to add. Maybe some ETFs also can add to balance this portfolio out. Or maybe I should, what I believe I should add is some dividend yielding stocks, right? These PSUs. Because if I add some PSUs, in a bad time, these PSUs dividend I can take and reinvest in the lost companies to average it better, right? That is something I need to do. Again, pharma concentration is very high in my portfolio, and this is one thing I need to start doing better. Okay, so what I do is when I find something interesting and I believe that I need to buy it for 5 years or I need to buy it for 10 years, I go and buy the entire amount in one shot. Okay, so for example, that pharma company, that power company, and another pharma company, which has both all three fallen down by 30%, I have gone and bought full quantity at that price. Okay, now I don't know whether it's top or bottom. I have this thesis that 5 years I'm not going to look at it. Let me just buy it one shot. But then over time, I've realized that I should not do that. Maybe I should put only 50% right now, right? If it goes up, I'll average again. If it goes down, I can average the remaining 50, because buying full shot at one time is not a right idea. Most of them were already at all-time highs, so I believe that they would go up, but the market kind of turned into a bad. Fundamentally, all are okay. Fundamentally, nothing's wrong. But I think I can stagger my buying rather than doing a one shot. That is a very big learning for me. That is what I'm doing now with that pharma distribution company. So I put 2 lakhs. So I'm slowly taking it up as an average, right? And if I exit something, I would not go full into it. I would actually start averaging it better this time. That is something I'm doing a mistake. I should rather keep it in liquid funds, arbitrage funds, or do something in that perspective rather than going all in, right? So that is a very big learning for me. Now, target allocation, I think this is basic. But basically, what I need to do is I need to go a little bit into large cap because I am an aggressive investor. So I should go a little bit into large cap and maybe not do these same portfolio mistakes that many of us have been doing, right? Again, this is just an introspection into my approach. Obviously, nobody is perfect. I don't believe anybody is perfect, including me. But this was just a way to just show you what I have been doing, what I need to improve on. The market obviously has not been great, but it's not an excuse, because the market is always going to give you drawdowns. Every year, market falls by 10-15%. So maybe my biggest learning from this is, one, add some balance into the portfolio, number one. And second thing I would definitely say is I should stagger my entries rather than investing at an all-time high. But great, these are two learnings I've got now. So this will make me a better investor going forward in 2026, 2027. So that is it. Just as a learning perspective, I made this video. So I hope you guys enjoy it. What I'm going to do now is, apart from this, I know a lot of people have been commenting and saying, tell me some interesting companies to look at right now, right, for this year. So what I'm going to do is, next week onwards, I think every week I will analyze one company in depth. Okay, so I will go deep into that company and analyze one company only. Every week, one company. We will do 8 companies in 8 weeks. So let me see how it goes. If you guys are interested in that, you can let me know. It is back to old school research where we go deep into just one company instead of doing 5 companies. Goal is not to see if it's a buy or sell. Goal is not to buy it or sell it. Goal is just to learn, understand, and I will be picking hot sectors only, interesting companies in hot sectors. For example, the first company I'm going to do is a power and data center proxy theme company. So we will go deep into it and understand what are the good things, what are the bad things. Nothing about buy and sell. Is that okay? I hope you guys enjoyed this. I hope you guys like this. Again, thank you all for watching, and you can subscribe to the channel if you have the time and you like this channel as well. Thank you guys. Take care. Bye bye.